The world economy is a mess. Stock markets are collapsing. They fell over 2% yesterday, Nasdaq 4. So somebody I know is long Nvidia. Bad investment. But it seems to be Trump and his tariffs messing about with the stock markets and the economy. What do you think, Harry?
I think you just put pretty much your finger on the pulse. Markets hate uncertainty. And when you have uncertainty in tariffs, their application and their scope, this causes a lot of uncertainty relative to economic prospects. And this is what stock markets are telling us right now. GDP growth, inflationary pressures, and then ultimately, how does the Fed handle all of this? That's what's at stake here.
Hello, everyone. The officials are back. So I am here with Ed, Will, and my dear friend Harry, and we want to talk to you logically about tariffs. What a mess. There's no other way of describing it. Stock markets are down. Individual companies that require steel, aluminum, oil, even parts from neighboring countries don't know what to do. And all of this is because nobody can plan. We hear about a tariff this month or next month or last week or 10% or 50%. Hey guys, what's happening?
It's a complete mess, isn't it? I mean, Canada gets hit with tariffs back in February, then they're delayed for a month. Then they come in on Canada and Mexico. Then Mexico's given a reprieve, Canada isn't. And now Trump increases tariffs on steel and aluminium to 50%.
In Canada.
In Canada. You just can't keep up with the changes.
And that is effective today, tomorrow, or?
Who knows? Honestly.
And we were laughing inside because people are important things, and then there is a cancellation of the tariff. But if you already paid for the tariff, then too bad. But if you import it and you haven't paid, then you don't need to pay. It's like, what's happening? Now, Will, I know you like the economics part. Can you explain to us what do tariffs do to economic systems?
Yeah, so I mean, tariffs affect almost all facets of an economy, right? For GDP, every single contributor, tariffs will have impact. But really, it's as you say many times, it's a misallocation. It's a drag on anything that's imported, which the US does a lot of. It will charge the importer more. So that means more cost to the consumer initially if they're going to continue to import. But still, then if they choose to produce domestically and reallocate capital domestically, they lose that global comparative advantage. They're not able to import as higher quality goods for as competitive prices. They're restricting their consumption set, so you inevitably end up with a deadweight loss. And what does this mean? This means the consumption component takes a big hit, and that's about 50% of US GDP.
So I would recommend, if you have interest in the issue, to pick up an economics book. I know that they're not great reading. Then read about comparative advantage. All that means is you should do what you're better at, not even what you can produce at a lower cost than your competitor, but just what you're better at.
Yeah.
Because you can always allocate your capitals better internally. So if you're really the master of the universe in chips, say, you should put all your capital in chips and import all the aluminum and steel from everywhere. But I believe, Harry, you have some affiliation with Canada. So how do you feel about these things?
Yes, I do. I'm proudly from Toronto, and I'm looking at this from a distance, but of course, as perplexed as a number of people are. I think one interesting thing is the immediate response that we have in stock markets, right? And not just equities, but we're also seeing a lot of jitteriness in other asset classes like crypto. And this should be signaling something to the administration. And the one thing that has always been clear with any market is markets hate uncertainty.
Yes.
So give them the guidance, whatever it is, and then they will adjust accordingly. But when we have uncertainty around application of tariffs, complications related to the USMCA trade accord when it comes to tariffs, then the market does not know on which foot to dance, right? And we've seen broad-based sell-offs across various sectors. And that is really indicative of, two things. One, obviously, people don't know what's going to happen, but something that was just mentioned in terms of increasing costs to consumers, because this now begs questions around Fed policy. If you're going to have a bump up in inflation as a result of the application of these tariffs, well, how is the Fed going to factor that in its reaction function? I'll turn to Will on this. I mean, would you agree that the sort of Fed on hold for longer is something that is probably not good for equity markets?
Yes, definitely. And I think, Powell said at the press conference on Friday, he kind of reiterated what the narrative that he's been pushing for a while of higher for longer rates from the Fed. It's going to be a difficult challenge for them, I think, because there is going to be an uptick in unemployment, most likely, because we're not going to have as much government job hiring. 20% of additional payrolls last year were government jobs, and Trump has said no more. So they're going to have potentially deteriorating labor markets at the same time as potentially higher inflation. So how do you...
So the dual mandate of the Fed obviously is going to be a tricky one to solve.
So at a high level, from a pure economics point of view, a tariff actually doesn't create inflation. It causes some products to go up in price, but because of the misallocation, actually more products fall down in price. All it means GDP goes down. And this is what the stock markets are signaling, a slowing down in the economy. And this is very bad globally because it contaminates others as they retaliate. So the economy of Canada is one of the worst, will be one of the worst hit. And so we have a little bit of a trading idea for you here. Maybe you should sell the Canadian dollar.
Leave the loony alone, right?
They're very much loony, and they're changing the prime minister, and all that stuff is not going to help them. They are in a bind. But the consumer and the businessman, as you guys were saying, hates the uncertainty, because in all the discussions, and we alluded to this last week, if you're a gasoline importer, do you import or not? Are you going to get hit with the extra tariff or not? What are your duties, your import duties? So you don't want to do anything. And this is very harmful to the entire system. So policy is just happening like on a whim. And that is really not good. But at another high level, as people get fired in the government, actually productivity will go up. But all these things take time to travel through the economy. So I think the economy is going to have a very rough time for the next 6 months at least.
I think just to add on that, because I mean, there's several facets. I mean, we're talking misallocation of resources, difficulty with the Fed's dual mandate. The other aspect is, I think, going to be interesting is public opinion, because, a lot of Americans have their pensions in stocks. They have 401ks, and obviously their wealth is greatly affected by the recent gyrations in both the S&P 500, Nasdaq, et cetera, et cetera. So this sort of wealth effect on the U.S. consumer, when they do see the value of their pensions, being reduced by the kind of declines we've witnessed over the past couple of days, that can't be good for consumer confidence. So then you add a secondary or tertiary element to the picture in terms of why people are now negatively looking at the economy, as you were saying, in terms of there will be a slowdown. And I think the officials commented already on this, in terms of how Donald Trump is now expressing himself in this rather odd euphemism of transitioning economics, right? Mm-hmm. You guys have highlighted that.
Yeah. And that is going to hurt him politically, because everybody who had certain value in their 401ks is going to be saying, I don't know if this was such a good idea after all. But anyway, going on to the next topic, the Russians and the Americans are meeting in Riyadh. And we couldn't help but notice that Zelensky, the leader of Ukraine, came to Riyadh yesterday. Not for the meeting, just say hello to the prince. And there were all kinds of memes, right? The pauper and the prince, things like that. which are appropriate because he is asking for money. And I also noticed that he came in with his usual garb, what I call the running gear, because he needs to be ready to do a runner
Say
when
it's a
the time
sartorial
comes.
choice.
Yeah.
Zelensky's sartorial choice.
And but he has left or is leaving, and the discussions are just between the Americans and the negotiating team for the Ukraine. They were supposed to have a 3-hour meeting, which already passed, and there is no outcome. So I presume they're very hard negotiations. But the Americans have said very publicly that Ukraine has to lose territory. That's non-negotiable. They have to acknowledge that Russia took parts in, and they cannot even talk about returning to 2014, let alone to 2022. It's not happening. But the Ukrainians have the opposite idea. So that's incompatible. And the Russians also have said no foreign troops, which I guess America is a little bit open to the Europeans sending troops there. So what I see is a lot of incompatibilities, but in the meantime, Russia is winning and is progressing, and it almost removed all the Ukrainians from Kursk. So what happens if some kind of cobble agreement comes out today? What is the impact to the oil markets, you think, Harry?
Well, obviously, if we do have some form of, let's say, preliminary accord, and Russia has been quoted as being favorable to some form of truce on the path to a final settlement. And I think if we do get something, whatever shape or form that is, maybe it's cessation of air hostilities or sea attacks, whatever the form that may take, obviously you're going to be affecting risk premia in oil prices. But at least it'll be a first step in the right direction. The difficulty I have is, as you highlighted, there's so many incompatibilities or gaps to bridge between both sides that trying to think about how we come to a resolution. Does this require, for example, from the U.S. side, the first step being the signing of a minerals deal between Ukraine and the U.S., which did not happen when Volodymyr Zelensky went to the White House the last time? Is this a first step for Trump to then move on and engage with the Russians? So there's a lot of, I guess, moving parts, and there's also a lot of things to reconcile, for which right now it seems that it's quite difficult, from security issues, economic issues, territorial issues. It's just hard to see how Donald Trump will be able to bridge all of these gaps, right? Even if he were handed some form of minerals accord.
So while the talks are going on there, the price has done something.
Yeah, well, the price came down yesterday quite significantly. It's bounced a little bit today, bit of a dead cat bounce perhaps, but I think the overall impetus is downwards, especially if there is a settlement. I mean, Trump wants low oil prices. That's the one thing he's clear on.
Yeah,
tariffs are a mess, but low oil prices, that's what he wants. So $60 cap on Russian oil, that's surely going to go.
Yeah, we have been very clear in our writing and comments that the market was heading towards the 6 handle. And there is no schadenfreude here, but it was obvious with Trump's goals of low oil prices that he had to go there. The question is, will it continue to go further down? But at the moment, it's kind of fighting 70, 69, that kind of thing. But I think any resolution will push it another notch down. And of course, on the last issue is the Sierra meeting in the U.S. where all these executives have been traveling. I enjoy very much the comment by the CEO of Aramco that there is more chance of Elvis speaking at the conference than seeing transition happening. And any signal right now is that capital is being pulled out of wind projects and green projects. So what do you guys think about that?
It's interesting because I was reading the headlines around Sierra Week on Bloomberg, and a number of oil executives that were certainly giving their full-throated support for Donald Trump's energy dominance agenda. So, but at the same time, we also know that these very same oil executives are extremely conservative when it comes to deploying capital and making finalizing investment decisions and so on. So an era of drill, baby, drill is maybe not exactly around the corner just yet. So we have this sort of duality, so yeah, maybe because it is a conference that people are feeling a little bit more enthusiastic and getting behind the message of President Trump in terms of energy dominance. I'm sure, of course, that many gas producers would like to send LNG to Europe and have American gas rather than Russian gas present, But at the same time, when we look at what is scheduled in terms of capex, when we look at the decline rates, we're not, neither ourselves nor I think the broad-based community of pundits and analysts looking for massive growth in let's say crude oil supply for the U.S. Over the coming year. There may be growth in NGLs perhaps, but maybe we're not going to see that kind of expansion in crude. That just leaves us gas perhaps as the one area where that energy dominance could express itself.
One thing I'd like to add to that is some of the Trump administration suggested bringing down oil prices as a means to lower inflation and therefore allow the Fed to offset the tariff problem. But if you bring oil prices down to $50 per barrel, and then you've increased the import cost of steel and aluminium by 50% for Canada, suddenly their break-even cost for these producers goes up.
Yeah.
They can't afford to produce
Shell
$50.
producers.
Exactly, shale particularly. They can't afford to produce $50 a barrel anymore.
But maybe
So-
that opens the R for Chinese steel, which will be cheaper than Canadian steel. Anyway, it's a mess. To close the program, we'll show you a clip of Elvis in Saudi Arabia or lookalike. I hope you enjoy the picture. Thank you very much for your time. We'll see you soon. Thank you.